Dear all, a very good evening to all of you. I am Kajal Vahi and I welcome all our attendees today on our special webinar on use of technology for year-end GST due diligence. Before we start the session, I would like to share the new features of Texo Online. We have updated case law library with over 15,000 judgments with intelligent multiple search options. You can find notification circular with search tools and notification tree for rate cess exemption in RCM. We have also updated the model draft reply of key notices and research on contemporary issues. Next is our Ask GST query feature to get concept clarification. Also, we have an intelligent rate finder for goods and services. Practical case studies on 26 sectors. With that, all 174 sections interlinked with acts, rules, notifications, circulars, FAQs, commentary, illustration, and cherry-picked case laws. Daily updates to subscribers via WhatsApp and email. All the features are available at a very affordable price only with Texo Online. We, Texo family, are honored to get your support to make our journey meaningful. We are grateful if you could get the reference, and for the reference, you can just share the number at 9891005210. I just repeat, it's 9891005210. In today's session, we have with us CA Dr. Atul Kumar Gupta sir and GST expert who will share his insights on the topic of the day that many of us have been looking forward to. So, I would now like to welcome CA Dr. Kumar Gupta sir to kindly take this session forward. Sir, please welcome. Sir,
should I start, Kajal? Should I start, Kajal?
Sir, please welcome.
Yeah. So thank you very much, friends. And at the outset, I'm thankful to the team Texo for giving this opportunity to share some of my thoughts related to the topic. There are the two topics which is given to me today. And I believe that will be very useful for our colleagues who are attending this program. The one which is a year-end compliances. Everybody has to take note of that. That okay, what kind of a compliances are there which we are supposed to follow on the 1st of April 2025. That is something that we are going to discuss today. And the second one is that the technology, the use of technology, how we can use the technology to see that the technology supporting our initiative, at least for the due diligence of the GST, that whenever we are conducting the audit or otherwise, we are giving a normal audit also, that whether the SSC is following all the aspect. So to improve the quality, support the quality of the audit, the GST data can be very, very useful. And that is something that how the technology can you provide you the data that is I'm going to discuss today. Friends, as far as the year-end compliances are concerned, I have divided the year-end compliances into the 4 parts rather than 3 parts. One is that we have to do a lot of reconciliation based before we are closing our books of accounts. So that is something that I'm going to discuss with you. You are aware that my last return for the GST related to the financial year 24-25 is due in the next few days. That is GSTR 1 and the 3B. And we are also closing our books of accounts as far as the Q4 or even the year end is there. So how they are reconciling with each other. There should not be any gap that, okay, there is a mismatch. And what kind of a checks you should have. That is, I'm going to discuss and deliberate there. Then, my dear friends, certain verifications and the filings are also there, which we are supposed to follow. That is also I'm going to discuss with you. As far as the filings are concerned, there are the year-end filings which are due. So we have to see that whether we are aware about those filings or not, and we are doing the same to avoid the interest liability or even the penalties in the times to come. So that is there, though the waiver scheme is already over. So, but I will be touching upon little bit on that. Even I will be touching the new amendments which has been introduced from the 1st of April 2025. Also, there are 3, 4 changes only, but since I am speaking, so I will be covering that as well. And finally, I will be touching upon the technology part, that how the technology can support our due diligence process, our audit, the quality of the audit overall. So whether you are doing a car audit or you are doing a bank audit or otherwise any other audit, the how the quality can be further strengthened using the technology, the tools which I am going to discuss with you. My dear friend, as far as the reconciliation part is concerned, the first reconciliation, I believe that everybody should be aware of and should be taking care. The reconciliation between the GSTR 1, 3B, e-way bill data, and the e-invoice versus the books of accounts. So all of them should be in a single sync. It should not be a case that the books are talking about something different, whereas the GSTR 1 and 3B is reflecting some other data. So it should be in a sync in a such a way that whatever the turnover you are reporting in the GSTR or the 1B, 3B, that should be syncing, that should have a correlation with the books of accounts. Even if there is a mismatch, there should be a, like we are developing a bank reconciliation statement. Likewise, we should create a reconciliation statement that how the GSTR 1 and the 3B are matching with the books of accounts, and as well as the e-way bill, as well as the e-invoices as well. So, my dear friend, this is the first one. And in case there is a mismatch, we should do our rectification entries immediately in the last GST return, which is supposed to be there. And in case some reconciliation is required, then the reflection can be there in the books of accounts. Similarly, my dear friend, when we talk about the output liability, it was GSTR 1 and 3B. But when we talk about the input credit, so we have to see that the whatever the credit which was there in the 2A or 2B vis-a-vis 3B. So whether we have taken the right credit or not is something is there. At the same time, whether the ITC which we are going to reflect in the books of accounts, not only the reflect, but we have claimed in during the entire year, whether they are matching with the books of accounts or not. So that is something also very, very important. So it should not be a case that you claimed a credit of, say, for example, 50 lakhs in actual, but in the books of accounts, you are only reflecting the 45 lakhs or 55 lakhs. So then there will be a challenge in the times to come. So that is something that we should reconcile, and even the closing balance as well. So when we are saying the balance available in the cash ledger or the credit ledger, that should match with the books of accounts, so that the when you are conducting the audit or the providing the assurance services, or even you are working as a CFO or the manager finance, so the books of accounts should match with the whatever the data which is getting reflected in the GSTN portal. Then, my dear friend, as I mentioned you, the closing balance of the ITC ledger vis-a-vis the electronic credit ledger, that should be there, that there should be a matching of the same as well. That whatever the current asset we are showing as a input tax credit, so we have to see that whether the electronic credit ledger is also reflecting the similar amount or not. And if it is not, then why it is there is a gap. That's something that we should prepare a reconciliation statement, so that tomorrow it should not be a case that if some scrutiny is there and we are not aware that how the accounts get reflected in the current asset vis-a-vis the electronic credit ledger. So that is something that I believe that we should be all aware of, and we have to see. Then, my dear friend, coming to the RCM liability. Now, my dear friend, this is again a very, very important point. You will witness that whenever there is a GST audit which is being conducted by the department, or the ASMT 10 is being issued, normally the department is conducting the very, very important audit, not only for the suppliers, that whether they are the vanished vendors, suspended vendors are there. They are also checking whether the expenditure on which the RCM liability is there, whether that has been duly complied with or not. So, my dear friend, there will be the expenditure in your P&L account. For example, the expenditure related to the legal charges, the expenditure in the foreign exchange. There may be the expenditure related to the rent a cab or the security guard, arbitral tribunal, and many more, like a GTA. So all these expenditures are attracting the liability of the GST as a reverse charge mechanism. So whether we are paying the same or not, when it was due, when it was paid, or any interest liability is there or not. So it is something that very, very importantly we have to do a scrutiny. So we have to do a scrutiny of the all the expenditure which is there in the profit and loss account, and see whether there is any liability which we have missed. And accordingly, if there is any missing aspect is there, then in the coming return, which is scheduled in the next few days, we have to see that we are complying with that, so that there will not be any liability of the interest which is going on, and as well as the penalties should not be there tomorrow if the department will invoke the section 73 or 74 as the case may be, and they will impose the penalty which is ranging from 10% to 100% depending on the which section they have invoked. So my dear friend, it is very important that we have to conduct an audit of the expenditure as far as the RCM liability is concerned. In the same line, I will say that whether we have paid to the supplier within 180 days, that is I am going to discuss later on. Now, my dear friend, coming to the fifth point, that is I am going to discuss with you is about the advances. So my dear friend, like we discussed about the expenditure, now I'm coming with the income side or the revenue side. At times you will find that the certain amounts has been reflected in the current liabilities as advances or the unbilled revenue or the deferred revenue. Now, my dear friend, when this will be a case as far as the services are concerned. So when we are doing a supply of services, the liability of the GST will be there, because on the services element, even the advances are attracting the GST liability. But in case we are dealing with the goods, so supply of goods, in that case, the supply of goods, the advances are not supposed to, are not liable to, are not attracting the GST liability the moment somebody is getting the advance in that particular case. So my dear friend, you have to see whether whenever you find that certain advances are there, certain unbilled revenue or the deferred revenue is there in the books of accounts, specifically in the current liabilities. So whether the how for what purpose the advances pertains to. So in case the advances are there for the supply of services, so then the next question will be there, should be there in your mind, whether the GST has been paid on these advances or not. And if it is not, then immediately we should pay in the next few days the return which is due, and accordingly we have to meet our liability. But in case the advances are pertaining to the goods, in that case the liability will not be there, and you can very well finalize your final books of accounts without any GST fear. Then as I mentioned you, the sixth point, which I believe that we should be discussing, is about the 180 days compliances. My dear friend, it's very important that we have to see the creditors. We have to see that that out of the creditors, how many creditors are there which are due beyond 180 days, and we have claimed the credit. So my dear friend, I just wish to share with you the 180 days compliance is very, very important, and many times the interest liabilities are coming when we are not paying within 180 days to the supplier. Now, before I move, I just take a question for the benefit of our colleagues who are attending this program, to see that, or you can say that I'm taking a test, that how we are proficient in the understanding of the GST law, so that there should not be any mistake on our part. So I am giving you a date. For example, I am giving you a date that the person uh, received an invoice on the 1st of January 2024. Okay. And the date of invoice is 2024. He received the invoice. He received the invoice on the 15th of March 2024. And he booked the invoice on the books of accounts on 20th of March 2024. Now, my dear friend, my question to you, that out of this A, B, and C, this 180 days when we are talking about, that the compliances of the 180 days, when it will trigger, whether it will trigger on the 1st of January and we have to calculate 180 days from the 1st of January, or it will trigger from 15th of March or 20th of March. So this is the question from my side to you, that the 180 days will be counted. So you can put on the chat box that, okay, you have to give me that, okay, in the chat box, the answer. So I am just waiting for your answer in the chat box, that, okay, just show me your understanding that when this 180 days applicability will be there, because it will depend that if we are not aware, then there will be a challenge that tomorrow there will be a liability of the interest will be there when the department will come and do a scrutiny that whether you have paid it within 180 days or not. So I'm waiting for your reply in the chat box, in case you want to give a reply in the chat box, that, okay, or so there are replies in the Q&A. I can see that the Sandeep Agarwal ji and Vinod Sharma ji is giving an answer of 1st of January, where Ganpat Raj ji is saying the 20th of March. And there is another question from Vinod Sharma ji, which I will take later on. But I received the answer from the date of invoice, 1st of January or something. So chat is disabled. So Kajal, there is a Ganpat ji saying that the chat is disabled. So if you can In case it is possible, you enable the chat.
Yes, sir, it is enabled.
Yeah.
So,
So, mind no problem. So, Rajesh ji is
yes, sir,
saying,
it is enabled.
Rajesh
So,
ji is saying 15th of March, and Kuldeep ji is saying date of invoice. Pramod ji is also saying date of invoice, but Rajgopal ji is saying the 15th of March. So, my dear friend, I just wish to clarify you. Yes, thank you very much for your very, I will say, the warm response on my query. So, just to share with you that as given in the law itself, under section 16, it is not the date of invoice when it is received. So, it is not a case. So, my dear friend, it is not the date of the invoice received. It is not the when it is booked. The right answer is A, that the based on the date of invoice. So, the 180 days will start from the date of invoice rather than the invoice received or booked. So, there may be a case that you received the invoice after 4 months, but still the 180 days requirement will be there when the date on which is mentioned on the invoice. So, my dear friend, it's very important for all of us that we should be aware of all these provisions so that there should not be any kind of a non-compliances on our part, that we are not aware that when we are finalizing the balance sheet on the 31st of March, whether the payment has been made or not. So, my dear friend, just to share with you that as far as the GST is concerned, the year-end compliances or otherwise as a due diligence, there are the three very, very important registers are there, which are the soul of the GST. One is the ITC register, that everybody should prepare a very good ITC register. And in that ITC register, the date of payment. So the date of payment should be there against every invoice, so that on a click of mouse, by just doing a filter, you will be able to see that whether the date of payment is matching with this 180 days requirement or not. So the date of invoice versus the date of payment within 180 days, it is okay. If it is okay, like the date payment is made, then it's okay. Otherwise, there is a liability either to reverse the credit or you have to pay the interest. So something that we should be aware of. And I just wish to share with you that if you are not able to pay within 180 days from the date of invoice, it is our duty that we should reverse the credit, and we can again reclaim. Again, we can reclaim the credit whenever we will pay to the supplier. So that is the possibility. The facility is being given by the government. So it's not a case that you will lose the credit. No, you will get the credit again. But the only point is that if you are not paying within 180 days, you have to reverse the credit along with the interest. And now you have to again reclaim whenever you will pay to the supplier the amount as far as the GST vis-a-vis the service is concerned. I just wish to clarify you one more thing, that it is not the case that you have to pay within 180 days only the GST amount or the service element. No, both. So, for example, the invoice is for 1 lakh rupees and 18,000 rupees is the GST. You have to pay 1 lakh 18,000 rupees, the entire amount, to claim the credit of this 18,000 rupees. By paying only 1 lakh rupees or only paying by 18,000 rupees, that will not serve. And just wish to share with you that this 180 days requirement is not applicable. Just to share with you, the 180 days requirement is not applicable in a case where you are paying the GST under the reverse charge mechanism. So in case you are paying to the advocate and you have paid this GST on a reverse charge mechanism, now whether you are paying to the advocate or not, or you are paying to the GTA or not, hardly makes any difference. And that 180 days requirement will not be applicable on those cases. So my dear friend, this is something that I wish to share with you as far as the year-end compliances are concerned. Let me erase this so that we can move further. Now, my dear friend, coming to the next point, which is very important, is similarly to the inputs. So earlier I discussed with you that the ITC reversal as far as the 180 days compliances are concerned. Now I'm coming to the ITC reversal on the capital goods sold during the year. So as I mentioned you, the three important register which was there. The first register was ITC register. The second register is a fixed asset register. Now in the fixed asset register, you will be able to know that if certain assets are write off, certain assets are disposed of, in that case, whether there is any GST liability on the same or not. So my dear friend, just to clarify you that as far as the capital goods are concerned, the every capital goods has a life as per the GST for the 60 months, or you will say the 20 quarters. So if I am using an asset for less than 20 quarters, in that case, my liability to pay the GST will be there. How it will be calculated? I am giving you an example. Now let us assume that I purchase a machine. I purchase a machine for rupees 5 lakhs. I will just use the pen. I purchase a machine for rupees 5 lakhs, on which I paid the GST at the rate of 18%, 90,000 rupees. Now I use this credit against my output liability. And my machine, I purchased the machine on the 1st of January, say 2023. Now in 2025, for example, on the 10th of March 2025, I am selling this machine for rupees 1 lakh. Okay, the rate of tax will be again 18% and 18,000 rupees will be my output liability. But now whether any other liability will be there, as I sold the capital goods during this year, which is used less than 20 quarters. So for how much quarters I use the asset? I use the asset for 4 quarter for 23, 4 quarter of 25 and 1 quarter of 4 quarter of 24 and 1 quarter of 25. Meaning thereby I use this asset only for 9 quarter out of 20 quarter. Okay. Now, my dear friend, so I will be eligible only for the credit which is pertaining to the 9 quarters. So if the total credit is 90,000 divided by 20, multiply by 9, meaning thereby I will be eligible for a 4,500 rupees per quarter, and 4,500 multiplied by 9 will be 36 plus 4,500. So meaning thereby I will be eligible for a credit of so it will be yes. So it will be 40,500 credit I am eligible rather than 90,000. So how much credit I have to reverse? So as per section 18.6, just to share with you that as per section 18.6, what I have to do, that out of this 90,000 rupees, I have to reduce that the eligible credit, or meaning thereby I have to reverse the 49,500 rupees, or so this will be A, and the B will be 18,000, the transaction value. So A or B, whichever is higher. So in this case, I just wish to clarify you that because of the section 18.6 which I am talking about, that you have to reverse a credit of 49,500 rupees, which I just mentioned you, the A or B, whichever is higher. So my dear friend, like this, if you are doing a finalization of your books of accounts and you are just see, you are finding in from the fixed asset register that there is a asset which is disposed of during the year. So you have to see whether this asset was purchased within 5 years. If the answer is yes, then immediately you should trigger the section 18 subsection 6 and see that what will be my output liability. And as I mentioned you, as I clarified you, that this way you have to calculate your output liability, that the transaction value or the inadmissible credit, whichever is higher, you have to pay. So in this case, what will happen, that for example, when we are talking about this capital goods, what will happen, that in this case, your output liability of 18,000 will be there, and additionally 31,500 rupees you have to reverse as a inadmissible credit in your GSTR, so that there is a compliance as far as the capital goods are concerned, and that you have to do on the upcoming returns, which is scheduled in the next few days. That is something that I am trying to convey you. Otherwise, you will be liable to pay the interest because you just sold the asset few days back. So in the month of March only. So accordingly, you have to see that the credit has been the credit related to the capital goods has been duly reversed. Now, my dear friend, coming to the another aspect which you should be aware of is the tax is paid on the miscellaneous income or not. At times you will find that there are the profit and loss account. There is in the profit and loss account, there are certain miscellaneous income which is getting reported. For example, the income related to the sale of scraps or interest income is there. Now one has to see whether any of those miscellaneous income is attracting the GST liability. You are aware that even if I am selling certain scraps or certain asset as a scrap, or certain disposing of certain other asset on which I have claimed the credit. So as per section 17 subsection 5, I either have to reverse the credit or I have to charge the GST on the scrap value. So that is something that you should be aware of, that in case there should not be any mistake as far as the scrap part is there. Then, my dear friend, as I mentioned you, the stock dispose of, written off. So in case, as I mentioned you, the section 17.5, in case certain stock is written off or disposed of as a sample, or otherwise maybe the fire, theft or something like that is there, in that case also we have to reverse the proportionate credit which is there as per the section 17.5, which you should be aware of. There may be a situation that you are writing off these creditors So now in the case of a writing of the creditors, meaning thereby you never paid to the creditor. For example, the invoice was for rupees 1 lakh. You claimed the credit of 18,000 rupees, but later on you paid to the creditor only 90,000 rupees. Now, my dear friend, in that case, you are not eligible for claiming the credit of entire 18,000 rupees because you paid only 90,000 rupees. So proportionately, you are eligible for a credit of 16,200 rupees. So whenever you are writing off any creditor, whether you have accordingly reverse the GST credit as well is something that you should be checking. Now, my dear friend, coming to the second part of my deliberation, that from the earlier I mentioned you the reconciliation. Now I'm talking about the verification part that you have to do. Now, my dear friend, the first verification you should be aware of is about the Rule 42 final calculation. My dear friend, it is a very big topic, though I will try to summarize in a very small way that as if you are dealing in the taxable and exempted supply. If you are dealing, so for example, you have a taxable supply of 7 crore and exempted supply of 3 crore is there. In that case, and you have a credit of rupees 20 lakh. So my dear friend, as the Rule 42 provides us, there will be a complete analysis on a month-to-month basis that for how much credit you are eligible as per the Rule 42. So you are aware there is a calculation called a T1. T1 credit means out of this 20 lakhs rupees, the credit which is related to your personal nature. Then there will be a credit of T2, that the credit related to your exempted supply, exclusively exempted supply, 100%. I am not talking about the common credit. I am calculating that. Then there will be a T3 credit. T3 means the credit which is related to the block credit, that is section 17.5. So the block credit. And then there will be a T4, which is a credit related to the taxable supply, 100% taxable supply, meaning thereby the full credit will be available. So my dear friend, as the Rule 42 provides us, that in case you are calculating a Rule 42, you have to see that you are dealing in the taxable and exempted supply. Then you have to do this calculation. You have to identify T1, T2, T3, T4. Then out of the rest credit, which is called a common credit, you have to follow this 7/10 formula. And accordingly, only the 70% credit will be available. Apart from the 5% credit for the common personal nature, you have to reverse. So my dear friend, there is a very tedious calculation which is there, which has been provided under the Rule 42, which you should be aware. Now, my dear friend, I am just again reminding you that this calculation of Rule 42, which I just shared with you, though I have not completed the example, but just I give you the glimpse because of the limited time available with us. This calculation which I just shared with you is only a monthly calculation. Now, every month you have to do like April, May, June, July, August, September, October, November, December, every month you have to do. And then you have to do an annual calculation also, which you have to do immediately. Otherwise there will be an interest liability which will start accruing. So my dear friend, this is something number one, that you are, whether you are aware about the Rule 42 or not. And even if you are aware, then you have to see that how you are doing a monthly or annual calculation. As far as the GST is concerned, that is something very importantly we should be aware of. Then, my dear friend, you have to see, as I mentioned you, the ITC register. So as I mentioned you, the ITC register, stock register, and the fixed asset register. These are the three registers which are the soul of the entire GST. ITC register, why it is ITC register? As I mentioned you, the 180 days, the other aspects are there. Stock register is something that section 16 says that, okay, whether you have received the goods or not. So unless until you don't have a stock register, how you will be able to prove? And the fixed asset register, as I told you, as far as the capital goods are concerned, you should be having a fixed asset register to see any removal of the fixed asset or not. Then, my dear friend, as I mentioned you, the another aspect is the supplier verification. Now, my dear friend, it's very important. Why I'm saying so? Because you are aware, as per the section 16, the section 16 says us, just a second. Yeah, section 16 says us that in case the supplier has not paid the tax, in that case, you are supposed to, you are not supposed to claim the credit. So, my dear friend, in case the supplier has not paid the tax, now, my dear friend, it's very important that when you purchase the goods, the supplier was active, his registration was active. But later on, due to one or the other reason, the supplier registration got cancelled or suspended. So, my dear friend, in that case, it is the duty of the receiver that he has to reverse the credit. he has to reverse the credit. Otherwise, there will be a liability of the interest and penalty as well, apart from the reversal of the credit. So, my dear friend, it's very important for all of us that we have to see that whether we are checking or not, that the supplier is active or not. Now, my dear friend, it's very important. So, for example, somebody is having a 1,000 suppliers. Now, how you will check? Either you have to go to the website and see one by one all the suppliers, whether they are active or not. And now there are the many tools available, even developed by the Texo team as well, that you can, on a click of mouse, by uploading an Excel file, just on a click, you will be able to see that which supplier is active, which supplier is number suspended, from which date, and whether they are filing the proper returns or not. So these kind of utilities, the tools will ease your burden of compliances and also save your interest and penalties. Because otherwise, what will happen? So, for example, you are aware in the GST law, the liability, the department can raise the show cause notice within 5 years from the filing of your annual return. Now, for 2018-19, still the liability can be raised up to June 2025. So, you can see that in the last 7 years, so the liability can be there. So now, if you have purchased somebody from someone in 2019, and today his registration in 2025 cancelled with effect from 1st of July 2017, meaning thereby your registration cancellation date is 17, your purchase date was 2019. In that case, your liability will be there to reverse the credit along with the interest and penalty, meaning thereby not only you have to reverse, but you have to pay the interest for the 6 years as well, which will be practically by the rate of 18%, which will become more than the tax value. So that is, my dear friends, very, very important for all of us, that we should be aware that whenever there will be a case that, okay, you are claiming the credit of a particular SSC, in that case, whether you have the supplier is an active supplier or not is something that we should be aware of. Otherwise, there will be a challenge for all of us. So, my dear friend, coming to the next one, that in case there are certain credit notes which are being issued by the suppliers, or you are issuing certain credit notes, so the proper adjustment of that credit notes has been taken care in the books of accounts vis-a-vis the financial vis-a-vis the GST returns or not, is something that we should be aware of. And last but not the least, my dear friend, what you have to see that in case the e-invoice provisions are applicable on you. So in case the e-invoice provisions are applicable on you, so you have to see that whether the turnover exceeding in 2025 is if more than 5 crore. In that case, for the 1st of April 2025, you are supposed to follow the e-invoice provision. That is something that you should be aware of, so that there will not be any penal provision for the general non-compliances are there. Then, my dear friend, as far as the ISD registration, you are aware that the new requirement of the taking the ISD registration has been introduced from the 1st of April 2025. So you should be see that whether any requirement of taking the ISD number or not, in case you want to transfer your common credits to your branches. Similarly, my dear friend, as the notifications came that you have to rectification, you have to file for section 16.4 is there before 7th of April 2025, as notification says 2024. That is, as far as the section 16.4 is there, that something that you should be aware of. In case you are exporters and first time exporter or a regular exporter or a supplier to the SEZ, then the LUT. So you have to see that either you have to file a fresh application or a renewal application for LUT is there. So that is something that you should be aware of, that, okay, in case you are your client is exporter, and in case your client is in the composition scheme, then they have to file the CMP02 on the common portal, though it was due before 31st of March. But nevertheless, you should be aware of that it was a lapse. In case there is a lapse, then we have to immediately comply with that kind of a requirement. So for a composition dealer, similarly, my dear friend, you have to file the GSTR4 for the composition dealer before 30th of April 2025. That is something very importantly. And in case you have to opt as a GTA supplier, you want to opt for a forward charge mechanism vis-a-vis the reverse charge mechanism, then you have to file annexure 5 and 6. And now recently, as in the hotel industry, it was introduced that the hotel industry can also opt for 5% vis-a-vis versus 18%. So in 18% you are eligible for ITC, 5% you are not eligible for ITC. But in that case, you have to opt in the Annexure 8. That is something you have to do before 31st of March. That is something also newly introduced last few days before only. So you should be aware of. Now, my dear friend, the waiver scheme, you are aware that you are supposed to pay the tax due before 31st of March, and you have to file the withdrawal application in case it is there. Now, my dear friend, coming to the changes which just introduced from the 1st of April 2025, as I mentioned you, the input service distributor, in case you want to distribute your common credit to your branches, you have to obtain the input service distributor registration. Similarly, my dear friend, as far as the this hotel business is concerned, you are aware that even if the tariff is less than 7,500, if you want to go with the 18% scheme with ITC, then you have to file Annexure 8. That is something there is there. And there is another requirement in the TDS and TCS return, that you have to give the details at the in the TDS and TDS return at the invoice level, so that earlier there was a problem that somebody was not aware that, okay, whether their TDS has been deducted and how the TDS has been deducted. But now in the GSTR 7, you have to give the value at the invoice level, as I mentioned you in the table 3 and 4. And similarly, in the GSTR 8, you have to give a place of supply column, you have to add, you have to submit in the table 3 and 4. So this is something that has been recently introduced. Now, my dear friend, coming to a very recent judgment as well, that there are two important judgments which I am going to discuss with you. That whether the condonation of delay in filing the appeal beyond 120 days is available or not, because there are certain judgments which are saying by the Honorable High Court that if you are not eligible for a direct route, indirect route is also not available. And the another one is that can you claim a refund of an excess paid tax after 2 years, because the law of limitation says 2 years. So just to clarify you that there are the judgments which are there which allows the appeal by the SSC even in this case. And as far as the another judgment which is there before you, the rights limited, which says that the this refund application cannot be rejected after 2 years in case the tax has been wrongly paid, because that will be treated as a deposit rather than a tax payment. So in that case, the deposit time, the law of limitation will not be applicable, which I just wish to clarify you. And the honorable judgment, the judgment follows the various judgment of Oriental Insurance, LR Infrastructure, and other, which can help you to contest your case in case the similar issue is there before you. So, my dear friend, this was as far as the two recent judgments was there. Now, what I will do that I have completed my deliberation. I try to cover all the compliances which are scheduled from the 1st of April 2025, or which are recently introduced. I have covered. Now, coming to the very important another small presentation before you, so that you can take the benefit. My dear friend, as I mentioned you, there are many tools. So, Kajal, somebody else will speak, or I have to?
Sir, Saurabh sir is there.
Sir, I will take this up.
Okay, okay. So, so before should I take the question, or Saurabh, you complete? I will take the questions later on.
Yeah. Thank you, sir. Thank you so much, Atulji. So as
I will take the questions, Saurabhji, maybe after you complete in 5-7 minutes.
Yeah.
Colleagues, I will take the questions, all the questions which are there, or even you can raise further questions in the meantime. And over to you, Saurabhji. Saurabhji, you can share your screen in case it is required.
Yeah, sure. So thank you, Atulji. So as rightly mentioned, or as rightly discussed by Atulji in this discussion, that there are tools available in the market which will help us for the due diligence activities and for the GST compliance review activity. So under the Taxo, we have also created two tools to review the same. I just share my screen to showcase you. Hope my screen is visible to all. Kajal, is my screen is visible?
Yes, sir. Yes, sir.
Yeah, thank you. So this is a website from which you can access our two products, which is first is a GST fitness report and second is a vendor scan 360 report. So the first GST fitness report is a due diligence report which can be generated by taking the which is a authenticated report, means you need to take the OTP from the user, and once you take the OTP, a detailed report in the form I'll just showcase you what the report looks like. So this is the complete report which you get for the due diligence activities, wherein within a fraction of seconds, within a 15 seconds, you will generate this report, and from this report you can analyze the various aspects from the GST perspective. So I just brief it down for your reference. You can from this report, what you can get is a GST compliance rating. So we have internally generated the compliance rating basis the GST compliance is undertaken by the taxpayers, and which will help to analyze whether the taxpayer is genuine or fake. Under this report, we have also provided the sales related data, sales and purchase related data for the current year as well as the past 2 years. Further, we are also providing the bifurcation of the turnover into B2B, B2C exports related, and also the HSN wise sales data also provided. The other aspects, major aspects which we provide in this report is basically a difference between the GSTR1, GSTR3B, analysis of the invoices or credit note issued. We also provide the details of the major buyers and major suppliers to analyze the dependency. We also provide a sales and purchase register of the key suppliers and the key buyers. Further, we also provide the analysis of the tax liability, how the tax liability has been paid, whether how much percentage has been paid via input tax credit and how much has been paid via cash. We also provide a difference or analysis between the ITC availed in the GST returns, which is GSTR 3B vis-a-vis ITC available in the GSTR 2A 2B. The other significant analysis which we provide in this report is details of the fake invoicing and the circular trading, if any. So if you see under the B2 and B3 report, we also provide the details of the suppliers who are involved in the fake invoicing and the details of the supplies which can be categorized as a circular trading. We also provide the month-wise details of the sales and purchases for the current as well as the past 2 years to analyze the tax liability or the trend. So this is a detailed report which we provide within 15-20 seconds, which will help the taxpayer for the due diligence activities. The second type of report, which Atulji was mentioning, is a GST compliance report, which is also known as in Vendor Scan 360 report, in which what we do is, since we all know that in the current regime, current tax regime, GST regime, the taxpayers are getting the notices from the tax authorities if in cases where the GST registration of the supplier is cancelled. So if the GST registration of the supplier is cancelled, the recipient of the services which have taken the ITC is getting the notices from the department that you need to reverse your ITC with interest and penalty. So the basic challenge from the tax recipient basis or the person who has availed the ITC is that he doesn't have any functionality to check the GST registration status in a bulk. So GST in today's time, GST portal provides a functionality wherein I can search the status of the taxpayer on a single basis, but there is no functionality where I can generate the report for a bulk suppliers. So many of the taxpayers could have been have 200, 300 or 1,000 suppliers. So it would be difficult task for any taxpayer to get the report for such 1,000 taxpayers. But under the Taxo, we have a functionality with Vendor Scan 360 when I can generate the report for multiple suppliers, and the report can be generated within a few seconds. As we can see, this is a sample report wherein I have generated the GSTN report for the 25 GSTN, and the report has been generated wherein I have been provided a different kind of analysis, say how much out of 25 GSTN, how much are valid, how much are invalid, and secondly, from these 19 which are valid GSTN, how many GSTs are active and how much are cancelled. So this kind of analysis you can also get within a few seconds. So any person or any person is interested in getting more details about these two softwares or solutions can contact me. My contact details are 9818 958 304. I'll repeat, it's 9818 958 304. So any person interested in understanding these two softwares or tools in detail can contact me. I'm more than happy to help them. Over to you,
Sir, we
Tulji.
have some questions in the chat box that
Regarding this taxo
hi,
credit.
is this report available to all the existing members? Uh, Second one is, sir, any template to generate report on mass basis in tool?
Yeah. So first question is first. What was the first question, Kajal? Kajal.
Members of Texo?
So this report can be generated by taking a separate subscription of taxo credit, wherein we can give you a login ID password. By using that login ID password, you can generate the both the kind of reports. One is the GST fitness, and second is a vendor scan 360. The second answer to the question is the format is a simple Excel format which you can also get while logging onto the portal, which is Taxo Credit. When you log into the bulk report, it shows you a download option wherein you can get a sample for uploading the GST number, and it is nothing but a simple Excel file wherein you can upload all the GST numbers. It's just start from the GST underscore number, and below you can mention all your GST and upload on the portal. It's just a simple format.
Sir, what is the costing of the tool? Next question is.
So the market price for both the report is, first is a GST fitness report is a 1200 rupees, and second vendor GSTN is a 12 rupees per GSTN. But anyone is interested can contact me. I'll give you a best rates.
So can we get purchase and sale details of the supplier?
Yes, so you are getting the sales and purchase of supplier. No, you are getting in the detailed report, which is GST fitness report. You will be getting the sales and purchase data of the taxpayer for which the report has been generated, not their supplies. So if you see, we have a column under this report wherein we are getting the details of the top suppliers, major suppliers. So you will be getting the purchase value of the top suppliers, not entire suppliers. Any other question,
So
Kajal?
I believe, Saurabh that you have given a very fine presentation.
No, sir.
Saurabh if you can close your window, I will answer the questions of my all friends who have raised the question related to the GST. As far as the Saurabh is concerned, Saurabh has given a very good presentation that how we can do a better due diligence as far as somebody is doing a circular trading, or there is a liability towards the suspended dealer, the credit has been wrongly availed, or there is a mismatch of GSTR 1 or 3B, some returns are not filed, or even the sales purchase register, HSN summary. So I believe all these things will improve the quality of the audit as far as the our professional colleagues are concerned. Whether you are doing a car audit or any other audit or a bank audit, that can help you to do a lot of due diligence with a very small, whatever the cost is there. Surabh will, so somebody will note down the Saurabh number. I believe that you should give your number in the chat box so that somebody who wish to speak to you can do.
Sure,
Now
sir.
coming to the question which is there in the chat box vis-a-vis the question, the queries for this Q&A. The one question which is there that 180 days applicable in case of an import of goods. So I just wish to clarify you, Naveen that this 180 days condition is not applicable on the import of goods. Why so? Because when you are paying the IGST, already paid the GST under reverse charge mechanism. Now the 180 days condition will not be applicable as far as the import of goods is concerned. But we can, the next question from Tanvi is there. Can we reclaim after 18 months of invoice? The answer is yes. Even after 3 years also, you can reclaim the credit. In case first you have reversed the credit and now you are paying after 3 years, then you can reclaim the credit after 3 years even. So that is not a require. There is not a challenge. Now, as Sanket explained, rightly mentioned that the section 16(4) is not applicable on the reclaim. So that is there. Common credit should be reversed on a monthly basis or annual basis. So it's a monthly basis, Tarang. Just to share with you that you have to do on a monthly basis as per the rule 42, and then also you have to revise your calculation on the annual basis as well, because the monthly ratio or the annual ratio can be different. So you have to do initially on a monthly ratio, and later on you have to recheck on the basis of the annual ratio, so that if any mismatch is there, then you have to do an extra reversal, or you can add back your old reversed credit as well. So that is something there. Then there is a question from Kalyan that in case of a cash discount received from creditor, then ITC has to be reversed on such amount also. The answer is yes. So in case you have paid something 1 lakh rupees, you are supposed to pay 1 lakh rupees, but you are getting a 10,000 rupees discount. So practically there will be a credit of 16,200 only, which is available to you, because somebody will charge as well the similar amount. There may be a scenario that somebody has paid the 18,000 rupees to the government and it is a financial credit note. So in the case of a financial credit note, there is no requirement to reverse the credit. I just wish to clarify you, Kalyan. Then there is a question from another gentleman, V. Ram. Sir, my client is a service provider and issued original tax invoice of rupees 5 lakhs. And then there was a credit note of 1 lakh. So I answered you the question when this question was raised by Kalyan, that in case there is a GST credit note, then you have to reverse. But in case it is a financial credit note, then there is no need to reverse the credit. PPT will be shared to the team. They will share with you whosoever attended this program. That can be shared to you. The guest house, whether the guest house is covered in the hotel industry, I answered. Yes, it will be covered. Thank you for your nice comment, Ganpat ji, for the presentation. As far as the 128A, there is a question by Kalyan that there is a penalty under section 125. Whether we can go with this form, the answer is no, because this scheme is available only when there is a tax due. So in case of a section 125, there is no tax due. So the scheme benefit cannot be taken as far as the section 125 is concerned. Then there is a question whether the sale and purchase register. So this answer has been given. The answer is yes. The sale purchase register of the person for whom you are scrubbing will be generated, and along with the HSN vis-a-vis the dealer wise. Both way it is available. So I believe that will help you. As far as the Taxo member, whether there will be a separate charge, I believe Saurabh will answer this question. We want to take service of a bot program. Our Taxo Online is providing the same. If yes, please share the contact details. So I believe, Saurabh, your details will be useful for our colleagues here. Tanvi is asking a question. If I purchaser supposed to reverse the ITC if not paid within 180 days, then can seller claim refund if he has paid the tax? No. It is not possible that the seller will be able to claim the refund. The seller duty was to pay the tax to the government exchequer. It is the right available to the buyer to claim the credit, which will get postponed till the time he is not paying to the seller. So seller will not get any refund claim in case, even if the buyer has reversed the credit. Saurabh has given the email mobile number 9818958304 as the mobile number. Now coming to the Sanket question, after doing annual reconciliation as per rule 42, if the scenario is that we need to claim ITC back, so yes, you can claim back the ITC because you so that is the right available to you as given in the under the rule 42 itself, Sanket. Then there is a question. I will take the question in Q&A as well, so rest assured. Then there is a question by Gagandeep. Businesses in Delhi take a property on rent in Chandigarh. Should we pay the reverse charge? The answer is yes. You have to pay the tax under the reverse charge mechanism as a IGST. Then there is a question, can we claim refund on the RCM paid if the same has not been utilized? The answer is no. Ashish, no refund is available unless and until there is an inverted duty structure or you are an exporter. or tax wrongly paid. So there are the only three conditions when you can claim the refund from the department. Otherwise, it is not. Kalyan ji is asking question, in case of a restaurant serving liquor, can the registered person claim composition scheme? The answer is, I have to check. So, Saurabh, can we claim the composition scheme in case somebody is serving the liquor or not? If you can answer this right away, or maybe in few seconds, you can answer maybe later on. Then there is a next question. For trade discount allowed on turnover target, it is mandatory to reverse the ITC. As I mentioned you, that in case of a trade discount, if it is a credit note, the GST credit note, then the reversal of ITC is required. If it is only a financial credit note, in that case, the GST reversal is not required. So these were the chat questions. Can we claim refund for leasehold rent paid in case of a recent Gujarat High Court judgment? The answer is no. You cannot. So in case you have wrongly paid certain tax, so in that case the refund is available. That is the only point. So Taran, I just wish to clarify you that if some tax is wrongly paid, because and now the Gujarat High Court judgment is there, then you can always claim the refund. That will be treated as a deposit only. So even the limitation period will not be applicable. Even if you paid 3 years back, then also you can claim the refund. So that is something that I wish to clarify you. So now I will request everybody that you please put the question on the Q&A, because I am moving towards the Q&A. So Saurabh, another question which is there, which I will forward to you, that in which table we have to show this ITC reversal as per the rule 42.
So it's under the table 7.
Table 7. So the Sanket, the answer is by Saurabh is table 7, because I am not dealing with the returns. So that's why I requested Saurabh. And Saurabh, the another question was there, which I just forwarded. I requested you that you can please see that whether the liquor serving restaurants can take the composition scheme or not. You please give the answer.
I'll check
Later on, you can give the answer.
Yeah, sure.
Right now, I'm covering the questions. Later on, you can.
Sure.
Then there is a question by Vinod Sharma ji in the Q&A. The RCM liability not deposited till 31st March should be shown under current liabilities in the balance sheet. So if it is not due, then you are not supposed to show. But if it is due, have not paid, in that case, it can be there. And provision for liability, you can always create. So Vinodji, you can always create a provision for the liability. So that will be there. Then there is a question, Vinod Sharma ji, if ITC not reversed within 180 days, any interest or penalty? Yes. If the credit is not reversed within 180 days, then the interest will be applicable from the day one. So if the tax has been, the payment has not been made to the supplier, and ITC not, so meaning thereby you are supposed to reverse the ITC. In that case, the interest liability will be there from the day one. That is something that very importantly we should be aware of. And if you are not doing, then the penalty will also be imposed. What will be for retention money 180 days? So retention money, the similar provision will be applicable, Tarangji, for retention money as well, that you will be eligible for a limited credit only. The amount you have retained, proportionate credit you should reverse. And whenever you will pay the retention money, then only you can reclaim the credit related to the retention money. So the Rajgopal ji is asking a question. Output tax was 18,000 in the machine, and the rest will be reversed. So as I mentioned you, 31,500 will be reversal as far as the GST or 3B is there. Sanket Moore ji is asking a question after doing annual reconciliation. That I have answered you. Hari Kishan ji is asking a question. One dealer has claimed ITC without receiving the goods and also raised sales invoice without actual supply, but he reversed the ITC through cash. But the department levied penalty under both sections. So yes, there is a very important, Hari Kishan ji, that you should challenge, because both sides it cannot be there. So even in the excise law, either they can charge the duty or the penalty on the purchase or on the sale. Saying that the purchase is faulty and now the sale is also faulty, and putting the penalty on both sides will not survive in the later course of action. So I believe that you should contest the case, and later or sooner you will get the benefit. So Hari Kishan ji is a very important that it is there happening everywhere. So we should all contest. When ISD registration started in GST portal, sir, it is already there. So the ISD registration was always there. It is now you have to decide that when you have to take. Then the financial credit note and non-financial credit note, I just wish to share with you the NVR, Rajuji, that the credit note which are not carrying any GST reversal requirement, they will be treated as a financial credit note. And the non-financial credit note means the credit note which are giving the benefit of the GST reversal. So you have to the supplier will be claiming back the credit and the buyer has to reverse the credit. That is something the non-financial credit note I am trying to convey you. Case laws, Harikishan ji, right now for penalty, there is no case law for 122. It is yet to be there. Whether the RCM is applicable on the land rent. So land rent, so that is immovable property. The Tarangji, RCM is applicable on the immovable property. The land is not a immovable property as far as the for the renting purpose is there. So I believe that they are talk about the dwelling units and all. So the renting of a residential property. Now the whether the land is a residential property, my answer is no. So I believe in the land it should be a forward charge rather than the reverse charge. So I believe that I answered all the questions which were there in the Q&A as well. Over to you, Kajal and Saurabh, in case you want
Yeah, yeah.
to
So
add.
Kalyanji, the question you are mentioning that a restaurant serving liquor can be registered person claim composition scheme, the answer is no. So the restaurant which is serving the liquor cannot claim the composition scheme.
So Kajal, over to you. We have completed all the queries. Thank you very much from my side to everybody for raising so many queries. Uh,
Thank you so much. Thank you so much, everyone.
So, I request everyone to please take a moment to scan and rate Texo.online. I will just share the scanner. Yes, it is visible on your screen. So, So, with that, we come to the end of this wonderful session today. I hope you all found the session informative and insightful. I would like to thank CA Dr. Kumar Gupta sir and CA Saurabh Garg sir for his time today and for sharing his wonderful insights with all of us. It has been an honor and privilege to have you all with us. Thank you so much, everyone. Thank you so much, sir.